Now let's build up the sales budget and collection budget. As we discussed in the class, the sales budget is always a starting point for master budget process because the sales budget is this uh, the it is affecting the planned inventory levels, purchase and operating expenses. Finally, we created the budgeted the income statement. So it is very important, and cash collection is also very important because the sales amount of the month is not the same as the collection of the month due to the credit sales and the deferred cash collection. So let's go to the practice. The suppose a lumber yard has the following data: accounts receivable May 31st, 20% of May sales of $360,000. The sales the 360,000 in sale in May. Monthly forecasted sales of 437,000 in June, 441,000 in July, 502,000 in August, 531,000 in September. So we are not going to practice how to forecast the sales in managerial accounting. That is part of principal finance or corporate finance. Sales consist of 80% of cash and 20% credit. That's why the cash collection of the months are not the same as the sales amount on that month. So all credit amounts are collected in the month following the sales, and uncollectible accounts are releasable and may be ignored. So let's start by putting all the input data. The accounts receivable as given, or we have to calculate $360,000 times 20% is the account receivable in May. So 360,000 times 20% is the accounts receivable. And then percentage credit sales, which is given number 20%. And then 80% is the cash sales. The forecast sales is indicated in the question. So 437,000, up of 1,000, 502,000, and 531,000. Okay, that is the forecasted sales which is given in monthly sales. Now let's create the sales budget. How much how much sales we expected to make, and then based on these sales and credit and cash collection, how much is actual cash in on our hand in July, the June, July, and August in total. So let's start credit sales. Now, how much percentage is credit sales? Right, 20% times the monthly sales 437,000. So 20% of the current month is this the credit sales, 20% credit sales. But I want to fix this 20% so that we can just drag to the right, and then in total is this 3 month. So we have 276,000 in the credit sales, the credit sales budget, and then cash sales. Cash sales is 80%. The 80% of the monthly sales. So 80% times 407,000. So we have the cash sales of that month. So let me also fix this 80% of cash sales, and then drag. That's just the sum of these 3 months. So we got the total 3 month cash sales, 1,104,000. Then if you sum up these two, it should be same as the forecasted sales of each month. Now let's create the cash collection budget. Cash sales of this month Cash sales this month means when we sell the product, we collect the cash right away. So the credit sales 349,600, exactly same as the cash collection. So we have this number. Then plus 100% last month credit sales. Now, the last month credit sales. What is the last month credit sales in June? The last month credit sales collection in June, right? The 72,000 is accounts receivable at the end of the month of May, but we'll collect this $72,000 next month, which is in June. So 72,000. And then what is the cash collection from the last month? That's correct, on June. So the credit sales is gonna be the cash collection of July. In the same way, just drag and then we collect this. July, the credit sales collection in August, 88,200. So total cash collection is 247,600. And then total collection of each month is, now you can see the difference between the sales and the total collection. So if you set up the cash budget, because the sales is only only the budget in cash inflow. So if we set up the budget based on only the sales, not considering actual cash in, then we expect the higher the cash inflow than the actual cash inflow. It affects the higher the spending budget. So that's why we want to create this cash collection budget. So every month, as you can see, every month the cash collection budget is lower than the actual sale, the sales amount. So we need to build up this cash collection budget, with which we set up all the spending budget next. Okay, see you in the next video clip. Bye bye.